There have been quite a few reports over the past week about the administration's plans to bring in more tax revenue by providing more funding to the IRS. I don't know how many of you are following this, but I am, and I think that this is important. So I decided to read to you this one particular article, which appeared in Fortune. It's titled, "Biden's IRS Crackdown Plan Includes Targeting Wealthy Tax Evaders, Reporting Cryptocurrency in an Effort to Close Tax Gap." Here goes. The U.S. Treasury Department estimated that wealthy taxpayers as a group are hiding more than half of their income outside of wages and salaries, a conclusion that aims to bolster the Biden administration's call for Congress to approve expanded IRS funding and broad new financial transaction reporting requirements. The department detailed in a report Thursday the administration's proposed measures to raise $700 billion of additional revenue over the decade through the Internal Revenue Service enforcement. The release follows criticism from Republican lawmakers and tax analysts that the estimate is unrealistically high. The enforcement plan is a central component of President Joe Biden's quest to fund his roughly $4 trillion in long-term economic proposals. The administration called for banks and cryptocurrency exchanges to report transactions to the Internal Revenue Service, which would also get new auditors and an upgraded information technology system. The IRS will be able to deploy this new information to better target enforcement activities, increasing scrutiny of wealthy evaders and decreasing the likelihood that fully compliant taxpayers will be the subject of costly audits, the Treasury said of the proposed reporting requirements. Income earned from small businesses, rental properties, and other so-called pass-through entities is increasingly becoming a target for the Biden team as it looks for ways to close the tax gap, the difference between taxes owed and those paid, which is projected to reach $7 trillion in the next decade. While both Democrats and Republicans have backed stronger enforcement as a means of paying for long-term economic development programs, challenges have emerged. GOP lawmakers have warned against government overreach, especially with regard to account flow reporting, and congressional rules could limit the ability of Democrats to apply the Treasury's estimate to funding for Biden's spending plans. The Treasury's plan includes requiring banks and financial institutions to report account flows, information the IRS currently doesn't have. The idea is to make pass-through income more like wages, which employers must report to the agency. Taxpayers report only 45% of their income when the IRS doesn't have visibility into their earnings, the Treasury estimated. That compares with a 99% compliance rate for wages, where employers are required to report to the IRS, the Treasury said. The annual return would report gross inflows and outflows on all businesses and personal accounts from financial institutions, including bank, loan, and investing accounts, the report said. The reporting regime would also cover foreign financial institutions and crypto asset exchanges and custodians. Cryptocurrency transfers worth $10,000 or more would be reported to the IRS. The Treasury said the new reporting regime would go into effect in 2023 to give financial institutions time to prepare for the new reporting requirements. The Treasury estimates that the increased visibility into taxpayers' accounts on its own would net the IRS $460 billion of the $700 billion over the next decade. More money would be raised from increased auditing. Biden is proposing an infusion of $80 billion into the IRS to hire new specialized audit staff and improve technology systems. The funding is expected to raise nearly $320 billion in revenue, or $240 billion in net money after subtracting the initial investment, Treasury officials said during a call with reporters. The additional funding would allow the IRS to add about 87,000 employees by 2031, roughly doubling the agency's workforce, according to the report. The Treasury estimates its proposals would raise $700 billion this decade and $1.6 trillion in the following 10 years. Outside scorekeepers have projected lower returns. The Penn-Wharton budget model, for example, has estimated $480 billion over a decade. It's unclear if the full $700 billion will count under congressional scorekeeping rules to offset the cost of the Biden plan. Treasury officials said on the call that the money raised from the plan would yield real dollars that lawmakers in Congress should review their processes so that these dollars can count. But the Treasury said its estimates are conservative. Some dynamics, like overhauling the IT systems and greater voluntary compliance due to higher adult likelihoods, are not factored into the total, the report said. The Treasury made a detailed argument for overhauling the IRS's outdated technology. The core tax return processing system, which handles more than 150 million individual returns each year, was first designed in 1962, making it one of the highest risk systems of the federal government, the Treasury said. The result today is decades of tax law written in a programming language that's no longer taught, a data platform that's highly complex to maintain, and an outdated system with a number of employees supporting it, about half of whom are eligible to retire, the report said. And now I'd like to say a few words about this story. The first thing I'd like to call everyone's attention to is the use of the, quote, targeting wealthy tax evaders, unquote, in the title. Notice how by doing this, the author of the article is drawing support for increased IRS funding by appealing to the average citizen who is likely to feel some sort of jealousy towards the wealthy. Of course, it's not just the financial press that's doing this. The Treasury itself is using this language to sway opinion towards their side. Now, I'm sure most people are thinking, yeah, I can get behind this. They aren't coming after me. They're going after those wealthy people who aren't paying their fair share of taxes like I am. But most people will stop at just reading the title. They don't notice that some of the measures that are being proposed will greatly reduce privacy. So what are these measures? Well, only a few paragraphs into the article, there is a mention that the administration wants banks and cryptocurrency exchanges and brokerages to report all transactions, also referred to as account flow. This is important for everyone in this community to be aware of, and not just the cryptocurrency owners, but also precious metals owners. Now, it used to be that a bank could file a suspicious activity alert with the IRS for a large deposit over $10,000, especially if a deposit was cash. It seems the desire on the part of the administration would be for banks to report a broader array of transactions to the IRS. And while the Treasury states that cryptocurrency transactions of $10,000 or more will be reported, it was not specific with regard to the size of the bank transactions that would be reported. And with computing technology today, there's no reason why the transaction amount that would trigger a report couldn't be arbitrarily small. They very well could require all banks to turn over all transaction data. And with enough computing power, this could easily be accomplished. With enough computing power, they could scour all of the data to look for suspicious patterns, much like the major credit card companies do to detect fraudulent transactions. Now, the article says that this increased reporting will enable the IRS to target enforcement activities towards owners of small businesses, rental properties, and other pass-through investments. It would make transaction information reporting as complete as employment income reporting. And what could all this information enable the IRS to do? Well, let's think about that for a minute. What could a government who had knowledge of everyone's transactions do? Could it create a database that tracks everyone's purchasing preferences? Absolutely. Google and Amazon already do that. But this database wouldn't necessarily be used as a tool to target advertising. No, I'm thinking it would be another kind of targeting that would take place. Will this happen? I don't know. It seems extreme. But one thing that we know for sure is that there has never been a power granted to the government that has not been abused in one way or another. Now, how about tracking who has cash? Sure, that's a more likely scenario. Imagine at some point in time having to account for how you have spent all of the cash that you have withdrawn from the banking system. Or maybe you would have to account for how all of the cash that you hold in your hands got into your hands. This could certainly happen. Sometime in the future, under the guise of protecting society from money launderers, the government might very well require everyone to declare how much cash they have on hand. Some might think, well, that's outrageous. I would never comply with such a rule. But consider this. It's like a game of prisoner's dilemma. If you've never heard of the game Prisoner's Dilemma, it's a classical problem in the mathematical field of game theory. The classical prisoner's dilemma goes something like this. Two bank robbers are partners in crime, and they're arrested and being interrogated in separate rooms. Each bank robber is faced with a choice to cooperate and turn both himself and his partner in, or alternatively, claim innocence. If both bank robbers claim innocence, they both walk away scot-free. If only one of them squawks, then that one gets a reduced sentence in return for his cooperation, while the one who maintained his innocence has to serve a full sentence. And if both squawk, then both receive a reduced sentence. And what is the outcome? Well, both will squawk, of course. The outcome in a society will be just the same. Some of the people who received the cash will declare how they got it, leaving those who didn't report it holding the bag. It seems a little dystopian, but certainly not out of the realm of possibilities. I could think of a more outrageous possibility when it comes to cash. But now let's think about precious metals. I'm sure lots of people in this community throw away their receipts, knowing that sales in small quantities will allow them to fly under the radar. Imagine, though, a future where all of the checks that you receive in return for the sale of your precious metals create a reported record when they are deposited into your bank. Small and infrequent transactions may not be a problem, but a time may come when all of the aggregated checks from a particular metals dealer will raise a flag with the IRS. And this might not be too big of a problem if the receipts are kept. After all, a person could very well claim ignorance that the transactions needed to be reported. After all, metals brokers are not required to report small sales. But if the IRS audits you, and all of a sudden you have a bunch of metal sales that they know about, you'll need to be able to prove to them how much you paid to buy the metals. Otherwise, you may find that you have to pay taxes and penalties not only on the gains, but also on the full amount of the sale. So there are many other dangers associated with this desire on the part of the administration to create greater transaction transparency to the IRS. It's a real Pandora's box. I just wanted to draw your attention to it. Privacy. Get you some.